Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, October 13th. Firstly to gold futures, and here we've seen solid buying in this market today. The market closing up at the highs of the trading day and forming a white body candle, so net momentum to the upside. The buyers closing with strong control by closing at the high and showing some strong commitment, with the sellers losing commitment down below the previous resistance area at 11.55. We see this large shadow formed representing price rejection, and the sellers losing commitment down around that area. This suggests a possibility of the market trading to high levels. One thing to watch for here is the reduction in the size of the white body. So even though we have had net momentum to the upside, it is smaller than the previous candle, and that was much smaller than the candle prior to that. And this may set the market up for a change of trend. Now, off the back of the previous strong rejection from this 1170 region, where we saw the market trade all the way off down to about the 1100 area, we could see or there is potential for a change of trend to the downside. Now, this is something of a hanging man type pattern, and that's where we have this smallish body and the largest shadow on the bottom, and usually at the end of a significant uptrend. And we have had the market break out through the top of the Ichimoku cloud, giving us an uptrend in the second term time frame, with the market making a series of higher peaks and higher troughs. If we are going to see the change of trend, the market will need to breach through this support area at 11.55, so that will be significant if we can close down through there as well. But looking to some potentially strong support to come in around the 11.45.8 level, and also around the Tenkan Sen 1136 and the Kijun Sen close to this 1133.9 previous area. Importantly, the Kijun Sen is pointing flat. Very often when it's flat, price action can be attracted back towards it, so let's watch for that to occur. Now, also with the highs of these two candles at the same level, this is also a potential tweezers top pattern, and that's where we get these two highs around the same level and a variation of the tweezers top. So we will be looking for confirmation of the change of trend, with the market to make a lower high and a lower low. Now, just looking at our band charts here, and here today we saw the market finding support around the upper band at the lows, testing down through there and being rejected from there, and that suggests that we have quite a bit of strength in this market, and that's just disregarding the reduction in the size of the white body here, but the lack of commitment by the sellers to close back down in that area and anywhere close to there suggests that there is some strength. As previously, I suggested that the area we should have been watching was this swing high, and the market hasn't tested there yet. We've tested very close to there. We are moving close to there with the buyers in control. So there is a possibility of the market trading through that region. We do just need to watch there and watch how the market reacts. If we do see the sellers come into the market, watching once again at the top of the bands at 11.55.54 support, and if we do close in a bearish manner down through there, we could eventually see gold futures testing down to around the middle of the bands at 11.39.9 at the moment. Next to NYMEX oil, and here we see continued price activity within the Ichimoku cloud. We have been trading within the cloud for quite some time, giving us a neutral market in big picture terms. Once again, as with the previous day's trading, we see at the close down around the lows of this candle, suggesting that the sellers have continued with control as they did for the previous day, and the trend has continued to the downside, with the market forming a lower high and a lower low. Previously we saw support coming in at the Kijun Sen and Tenkan Sen, and we have closed in a bearish manner down below those indicators, suggesting that we have a bit of strength from the sellers. We have seen a reduction in the size of the black body, so the net momentum that we saw previously is no longer in the market, and that suggests we could see a change of trend back to the upside. But with the sellers closing with control, there is a greater probability of the trend continuing to the downside. If we do see the market continue down, then looking to strong support around the 44.78 level, but we could also see support coming in around this 46.72 level. It was a previous area of strong resistance, so watching there very closely. Any rally may see resistance coming in at the Kijun Sen and the Tenkan Sen now around extending up to around the 47.50 region. Moving to the bands, and here previously where we saw this strong bullish market trading up above this swing high, we saw introduction of the indecisive candle, the small black body candle, the sellers coming into the market strongly, and the upper band failing to hold. Important trading activity here now with the middle of the bands holding as support for the previous day's trading. So around this 46.50 level, it will be crucial if we are going to see a continuation of that strong medium-term bias that we saw previously. Next to wheat futures, and solid buying coming into this market following the retracement and the market testing two lower levels. The buyers taking control on that previous candle for the second consecutive day. Strong upside price rejection and a loss of commitment by the sellers down to these lower levels, close to the $500 round number, actually down to about the 503 area. The change of trend has seen the formation of a large white body candle, the buyers closing with control and solid upside momentum. Breaching through the 516.50 level and the Tenkan-sen in a bullish manner suggests that we certainly could see continuation of a strong uptrend. Looking to strong resistance around 526, and that was the area that we saw the market testing to and being rejected from previously, and that is at the bottom of that highlighted yellow zone of resistance. The market is neutral in big picture terms by trading within the cloud and maintaining a bullish bias in the medium term time frame by trading above the Kijun-sen indicator, and that Kijun-sen is now pointing up, highlighting that we now have a resumption of the strong upside momentum in that medium term time frame. We've also seen the bullish breakout up above the Tenkan-sen, and it's been 3 days since we've seen the market trading up above there, and this suggests we could see follow through, but the follow through may not be sustained with resistance projected to come in around the 526 level. Now, just looking at the bands here, and here we saw previous bullish activity outside of the upper band, the market retracing back to within the bands and the middle of the bands, holding a support for the last 3 consecutive days, and today bouncing off in a bullish manner to continue trading outside of the upper band suggests that the buyers have resumed that very strong uptrend in that medium-term time frame, and suggesting good potential for this market to trade to higher levels. Next to corn futures, and not as significant a buying coming into this market as we saw with wheat futures, but still, even though we have a downtrend in place with the candle making a low high and low low, we have seen formation of a white body candle, so a switch of momentum in net terms from the sellers to the buyers. And if we look here, we saw the formation of a very small body candle, suggesting that we could have seen the buyers come in here. And also the buyers closing with control in this candle, and this suggests that we may see a change of trend here in the next session. Potential resistance at 385 once again. Previous area of support here, we see the shadows on the bottom of these candles, and for the last 2 consecutive candles the market testing around there. Strong rejection from the previous day, the market testing in a more significant manner here, and that will be the benchmark moving forward, 385. If we see strong bullish activity up above there, we could easily see the market test to the next level of resistance, which is the Tenkan-sen at 389. We should be continuing to watch the 381 level here, which held a support for today's trading. If we see the market breach down through there in a bearish manner, we could test down to 376, which coincides with the bottom of the Ichimoku cloud. But a neutral market in big picture terms, bearish in the short term time frame, but just bullish in the medium term time frame. In terms of the bands, and certainly a weaker indication here for corn futures than we saw with wheat futures, and previously we saw the market trading around the lower band, a breakout down below, a lack of follow through to confirm, but the lower band holding as support, so an opportunity here for the market to trade higher. Watching the middle of the bands, roughly about 387 to hold as resistance, and if we breach up through there in a bullish manner, we could see corn futures testing up to the upper band at 391, 392. Next to the US 30-year bond futures, and here we've seen the trend continuing to the upside, a candle forming a higher high and a higher low, but some price rejection coming in above the Tenkan-sen, which has previously held as strong resistance. Formation of the indecisive candle suggests the possibility of a change of trend, so we will be looking for formation of a lower high and a lower low. Support at 157.12 may not see that lower high and lower low form, and that will be an important area moving forward for this market to the downside. Strong resistance at 158.06 158.07 with the Tenkan-sen, and already in this new session that has started, we are seeing some resistance and price rejection from there. A bullish breakout up above there and strong bullish follow through could see this market trading higher, in line with being bullish in the longer term time frame and the medium term time frame. So that's going to be the benchmark moving forward to the upside, the Tenkan-sen around 158.07. Just using the Fibonacci extension technique, and here we see the market testing almost to the 50% level, being rejected. Formation of the indecisive candle around the 38.2% level suggests potential for a change of trend, but let's watch if this market does continue trading to the upside. Firstly, the 50% level at 158.18, and then the 61.8% level at 159.06. And looking at the Fibonacci retracement technique, and here we see this strong downtrend that we had with the market trading down to 155.26. The rally here has seen rejection coming in at the 50% level with formation of the indecisive candle, suggesting a possibility of a change of trend. If we don't see that confirmed, watching the 61.8% level at 158.25. To the bands with the US 30-year bond futures, and here we saw the market previously trading in a bullish manner outside of the upper band, suggesting that we had a strong bullish bias in the medium term time frame. The retracement with the market finding support around the middle of the bands, subsequent rally off there has seen resistance coming in around the upper band, and at the moment in the new session we are seeing resistance there about the 158.06 level. If we do see selling coming in, looking to the middle of the bands to hold a support 156.25, and if that's breached to the downside, the lower band at 155.12 should hold as strong resistance. A bullish breakout up above the upper band would see a resumption of the strong medium term bias to the upside. Next to the S&P 500 hourly charts, the futures on the hourly chart, and here we saw the market open around the Ichimoku indicators, the Kijun-sen, the Tenkan-sen, and the middle pivot point level, attempting to sell off early in the trading session but finding support around the top of the cloud, attempting to rally but finding resistance around those indicators, and then selling off to find support around the first pivot point support level. A rally and a breakout through the top of the Ichimoku cloud didn't see the follow through that we require, and we saw the sellers come into the market. That black body candle there set the market up for the change of trend that we saw, with the eventual breakout down below the Ichimoku cloud. Now on that breakout, it's been a moderately bearish breakout, but we haven't seen the strong follow through to confirm. What we need to watch here for now is if we see a rally, watching the bottom of the cloud to hold as resistance. That's at 1996, and the cloud actually moves up through the trading day. So as we move further into the session, we will be watching around the middle of the pivot point levels, very close to the round number 2000, and then up around the first pivot point resistance level 2007. Any strong selling could easily see the first pivot point support level tested at 1984, and then perhaps the second down around 1970